So Grits was co-founded somewhat 7 years ago, and the investment strategy was very clear from day one and continues to be very clear. And that is a investment real estate vehicle that invests in emerging markets, the African continent. It invests across today 8 African countries outside of South Africa. Our mandate does not include South Africa. And basically what we do is we follow global tenants across Africa and become their real estate partners of choice. And we provide a cradle to grave solution, real estate solution to global tenants. So the strategy was very clear and it remains consistent. It's multi-geographic. As I've mentioned, we invest in 8 African countries outside of South Africa. It's multi-asset class. We want to be able to provide a real estate solution, whether it's offices, whether it's warehousing, whether it's corporate accommodation to a global tenant. We only want to transact with tenants that are sticky to the African continent, so their business strategies have to be aligned with that of Africa, and also only investing in countries whereby we're able to secure hard currency leases, so euros or dollars or peg currencies. And the business has evolved from somewhat 7 years ago, a portfolio of over $150 million to just under $900 million invested in what I've said is 8 African countries. So Grit is very unique, and the sort of unique approach and also the differentiation to what we see in the market is that we are probably one of the only Africa real estate businesses that have investment teams, property management teams, facilities management teams, and leasing teams that are actually operational and positioned in each of our countries of investment. So the business sits, excluding our partners, with over 120 people in these various locations, various jurisdictions. So what we've done is that we've created the foundational base of real estate and of real estate solution in all of these African countries, which is a key distinguisher to that of our peers. And has been really important, obviously, over the COVID period about having proper presence on the ground. So having that cradle to grave, and with our partner, development partner, whereby we own 20%, we are also able to do developments for conglomerates across Africa. And that is also a key differentiator, is that the entire value chain of real estate sits under the Grit Group per se. So COVID was obviously a global pandemic, and it was faced by the entire globe. But what we saw from an African continent perspective is that we saw different behaviors coming out of different governments, and therefore different regulations. So that obviously all went in light of the performance of our underlying portfolio. So what we saw is that we saw huge amounts of resilience. Approximately about 55% of the Grit portfolio is exposed into offices, corporate accommodation, and light industrial. The resilience there was the fact that operations continued for these tenants. We continued to collect rentals. We continued to renew leases. None of these tenants actually exited the jurisdictions of operation. Where we saw obviously more pressure points was around hospitality. So around 25% of the portfolio is exposed into hospitality. However, because of our strong counterparties, both Beachcomb and Lux, the 2 largest conglomerate hospitality groups in Mauritius, and Club Med, we were able to see quite a bit of resilience, being that whilst we were assisting with regards from a cash flow perspective, we didn't have to give any rental concessions to these groups. And also the fact that these groups have been able to bounce back relatively quickly because they've all been recipients of substantial government support from the respective countries. So the hospitality sector, whilst was difficult over the period from an occupancy perspective, and the fact that Grit doesn't take any variable rent, so we don't take any risk on the occupancy of the actual assets or the hotels themselves, we were able to secure our cash flow underpinning these assets. Where we saw probably more difficulty was under retail, specifically Morocco, because Morocco, like Europe, went into a very, very hard lockdown. We saw 3 months of absolutely no trading. So that's taken some recovery in the market. But again, because of the diversity of the portfolio and diversity of both geography and asset class, the actual operational business was able to perform adequately, even though we had to have micromanagement of these certain sectors. And even to date, we're collecting over 95% of our rentals invoiced. And we've actually been able to bring down our EPRA vacancy over the period. So we saw that go to around 7%. We've been able to bring it down to below 5%, which means that you are seeing the ability of these assets now rejuvenating and economies and countries as we're starting to come out of the major lockdowns that happened under COVID. So what we've actually seen, and it was even in a pre-COVID sort of analysis, is that we've seen very resilient asset classes. We believe that following tenants and global tenants across Africa is the right sort of strategy from an investment perspective. So sort of what COVID highlighted is that I think it highlighted weaknesses in business models. It also highlighted, challenges around certain asset classes. But we've even said sort of pre the COVID world that our focus that we want to do going forward is really focusing around the strength of the tenant, the embassy type work. So we will be very focused in a post-COVID world around providing very good real estate solutions to embassies across Africa, including the American Embassy and the UK Embassy. We will also provide and support telecommunications as in offices, as in data centers. We see a very large trajectory and resilience around light industrial and the ability on distribution of products across Africa. Also under the COVID period, it highlighted where countries were not or did not have sufficient resources within their own geography. So the need now for storage, light industrial is a very big segment of the real estate cycle that we're looking into. So we're really seeing the business case. Whilst we were invested in that sector, we've seen the business case weight towards those three particular sectors into the future. So I think from our side, it's one about consolidation. The idea is now to raise the right type of capital for Africa. We've successfully closed a deal with the IFC, which is a very major DFI for the African continent on one of our industrials. So it's about sourcing the right type of capital for Africa and being able to take advantage of the right opportunities. So we believe that one, with our operational footprint, with our geographic diversification, with the ability to execute quite quickly on transactions, with our UK London listing and institutional support that we're seeing out of London, about 40% of our share register sits through the UK. On the basis of all of this, it well positions us to really look at assets in those three sectors. So really about focusing on pipeline around supplying corporate accommodation, light industrial, and sort of supporting the telecommunications, because that is a vital component of emerging markets in Africa, and really being behind those tenants to support their growth trajectory across Africa. So I think, what we have seen over COVID is that because certain sectors, being retail and hospitality, have had a very difficult trajectory actually globally, we've seen quite a bit of pressure on those valuations. And what's happened is that with this continuous pressure over valuations, we've seen a loan to value tick up of the business. Ideally, we want to be sitting on a loan to value below 40%. What that does mean is that we will need to be able to position the balance sheet sufficiently to achieve that. So we are looking at various different opportunities to be able to do that. We are looking at recycling of assets. So there's an opportunity on possible recycling of assets. There's an opportunity on just restructuring the balance sheet from an equity debt perspective, the ability to work with some of the DFIs and some of the other types of money around bringing different instruments into the business to drop the loan to value. But ideally, what we need to do is we need to leverage off the platform that we've created. So, We are the only real estate Africa business that has a premium segment listing in London. And it's to be able to look at that capital structure on a transformational basis to say, how do we leverage off the platform to take this business to the next scale? Also remembering that we've put the infrastructure in place already. So the ability to grow off this infrastructure exists. And being able to position the capital structure, the actual infrastructure that we've got from an operational perspective, and looking at the diversity of now different types of money to come into the grit business. One of the key aspects is looking at this loan to value to get that below 40%. So I think, one of the aspects is that this type of investment, whilst it has existed historically, is actually relatively new. So what we are seeing is what we're trying to do is we're trying to provide a consolidation of a diverse portfolio that is able to access sort of Northwest East Africa, because emerging markets go in cycles. So an emerging market investor into a grid type investment needs to consider that there is a timing in relation to transacting, timing in relation to attracting fresh capital, timing in relation to actually educating sort of institutional money around the African story. So, Africa is the last frontier of growth. And a lot of investors know, and alternative sort of funds know they have to be in Africa, but they don't know how to get there. And what Grit is trying to do is we're trying to create a bridge, a mitigated, governed bridge to have access into emerging market real estate across Africa. And what that does is that it takes time and it takes support and it takes a longer term approach. Because again, if we are able to use a platform to grow this business multiple times 3, multiple times 5, the ability to access real estate, I always say in my lifetime, I haven't even tipped the iceberg in relation to what the opportunity and how it exists. But again, it's getting that strong institutional support that is patient capital that understands that. So it's good returns, it's consistent returns, it's good cash flows, it's long-term leases, it's good tenants, but there has to be a longer-term view on a positioning in a grid type stock, because it does take time to build an emerging market platform. I think just from my side is just again around having more successful stories around Africa. So, I am a big believer in, again, as I mentioned earlier, that Africa is the last frontier. And having businesses work together to be able to launch the Africa story on many platforms, not just real estate, is absolutely key. So collaboration, relationships, partnerships are the heart of our business and is absolutely fundamental to the success of our business. And that is how we've got to where we are today, and we'll get to where we're going to in the future.